heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, the competition for AI chip dominance. It heats up as Intel takes aim at Nvidia. Details to come.
Plus, we'll bring you the latest updates from Paramount's annual meeting, which kicked off this morning.
And Tesla shares, they drop on reports that Elon Musk has shifted thousands of AI chips to XAI over the vehicle maker. But first, let's check in on the broader market context. And look, jobs market cooling. Those JOLTS numbers really putting pressure on certainly the stock market, but the bond market is currently seeing money move in at the moment. Yields go lower, some 3 basis points, as maybe we see space for the Federal Reserve to be able to cut later into the year. Now, remember, we've got the all-important jobs data on Friday as well to digest. Interesting that even though we've got money going into the bond market, we're not seeing that optimism around technology stocks right now. We're off by some 0.3%, and we're digging into the individual names that are perhaps dragging us a little bit lower. But look, we've been seeing all-time highs hit time and time again, maybe a bit of profit-taking currently being digested. We're looking at, though, a macro picture that goes global for a moment. This is a political story, complete upending of what many had anticipated happening in the Indian election. And for now, the rupee is down versus the US dollar significantly on what has been a shock coming from a political stage where Modi does not seem to be having the majority that was anticipated. More on that throughout the show. Let's move on to happening in the world of crypto. A little bit more risk on sentiment coming from Bitcoin at the moment. We're up 0.8%, 0.9%, let's call it. At one point, Ed, we eclipsed the $70,000 handle. This as we see perhaps more money moving into some of the ETF products. And, well, maybe some of that meme frenzy from yesterday helped some of the tailwinds. But what are you seeing on the micro?
Let's go back to that Tesla story for a minute. CNBC reporting that Elon Musk directed Nvidia to divert 12,000 H100s or AI chips that had been destined for Tesla to his other companies, X and XAI. Tesla shares now basically flat. They've been lower. I think everyone's trying to make sense of what that means for the kind of Tesla pledge to achieve full self-driving, because that is principally what the AI accelerators are being used for in the Tesla case. We'll get more on that later in the hour. Back to our top story, which is the battleground and the market for AI accelerators. Intel and Nvidia are both now sort of modestly lower. Intel have been higher. Pat Gelsinger on stage at Computex. A lot of headlines coming out of Computex. Here is what Intel CEO Pat Gelsinger had to say about that market for AI chips.
Every device will become an AI device. Every company will become an AI company. And we see this as the fuel that's driving the semiconductor industry to reach $1 trillion by the end of the decade.
The other thing that he said, Bloomberg's Ian King, is that Moore's law is very much alive, a reference to the white paper in 1965 by one of Intel's co-founders, that the number of transistors on an integrated circuit will double every year without sort of adding costs to the production process. But what he was really doing was pushing back against Jensen Huang of Nvidia and saying, we're going to catch up. We're going to do this.
Yeah, I mean, he's arguing his case, right? He's saying, look, we can still do it. He's trying to make the case that Intel is still relevant and can have a central role in what's going on and can capture some of this massive amount of spending. But at the moment, all of that money is going to Nvidia. Over $100 billion of revenue projected for that data center unit this year. Intel's data center unit is going sideways at best.
And I think what they have to compete on, yes, we're hearing yet once again annual upgrades to the offerings of semiconductors, Ian. But it's the full package that you get with Nvidia, even if it is expensive.
Yeah, I mean, what Jensen has already decided is, look, hey, I've got about 4 big customers, the big hyperscalers, but guess what? I really need to broaden that audience. So he's networking, as you mentioned, full servers, basically supercomputers, and he's put everything together already so that pretty much anybody can adopt it. So anybody that's trying to crash his party, like Pat Gelsinger, like Lisa Su of AMD, has to come to the table with everything, including the software, and that's a massive amount of effort that's required. They've got the resources, but he's got the lead.
He does, and at the moment it feels as though everyone else is slightly snapping around his heels. Where is ultimately, for now, all the value attributed to data centers? Can any of it be sort of thought to be being brought, this $1 trillion market that Pat Gelsinger talks of, how much is that going to be allocated to PC?
Well, that was the show, the sort of sideline of the show was, oh, hey, look, we all love the accelerators, but guess what? Your PC is going to get cool again. It's going to get interesting again. We had Qualcomm, Christian Amon there. We had Lisa Su of AMD talking about it. So they're all talking about revitalizing this thing that we all carry around and all use all day. At the moment, I saw some demos yesterday. They were okay. I think we need to see a lot more on the software side before we can get fully excited about this being a new dawn for a product we've seen for a long time.
I get all of the stories, particularly in Intel's case. Pat has been saying, I will return Intel to a position of technology leadership. And the problem is that presently revenues and sales don't match that story. So Intel basically $500 million this year for AI accelerators, AMD $4 billion, which is slightly better than they previously forecast, and Nvidia, let's just call it $40 billion. And that's the state of play.
Yeah, I mean, the number's probably close to 100 at this point. If you look at the estimates, it's absolutely enormous. But yeah, back to Pat, exactly what you say, which is he's got all of these audiences he has to serve. He has his internal audience. He has to motivate his engineers. He has to get his customers excited about what he's going to offer. But at the same time, if he promises too much and makes too bullish an attitude, investors are going to get excited and think, oh, hey, we're going to see a big upside on earnings, and he can't deliver that at the moment. So.
Ian King, breaking down what is the ongoing fight amid AI semiconductors. Brilliant to have you taking on Taiwan. Let's move over and think what this means for market capitalizations, the fight that goes on there. Ipek Oskodeshkaya is with us, senior market analyst over at Swissquote. Ipek, it's great to have you back on the show. And there has been a tussle at the top. Market valuations just keep on being allocated to Nvidia. Is that the right step?
Well, I think that Nvidia is making the headlines and they're doing a great job. Not only that they are making huge progress on their numbers, they do make enormous forecasts and they beat them by very comfortable margins quarter after quarter, but they come very regularly with new updates, with new promises, with a new idea of, for example, creating an ecosystem, offering hardware, software, and services. So they are making the AI a full environment where everybody could be interested and everybody will find what they're looking for. So in this sense, Nvidia looks like it's still a step ahead of the other competitors. And in terms of PE ratio, what we see is that even though the prices are going higher, well, the PE ratio is not going that high because, well, the earnings actually do follow up.
Ipek, let me show you this chart. And it's a busy one. So I'll explain what it is that we're looking at. If you think about it, big picture, Nvidia is just a few percentage points away from exceeding Apple's market cap, from having a market cap greater than Canada's equity market. And 10% or so would take it beyond Microsoft to be the world's most valuable company. Is that justified to your mind?
Well, I can't really tell you this is justified, but today, with the AI revolution, Nvidia has been catapulted to that place of the leader of this market, and the leader is in a revolution. So this is not something that happens every year. This is once in a decade or once in a few decade thing. If AI is the next big thing after internet, then Nvidia has got a huge opportunity, a huge potential to increase its business. And now we are reading the reports that Nvidia is not selling chips. It is now selling an environment. It is selling a dream, and it is actually selling us a new life, a new way of doing things. And now we are just at the beginning, and people know that the opportunities are simply huge. So yes, as Apple has become one of the world's most valuable companies because, well, they just got this iPhone in our hands, well, Nvidia could very well become the next big thing by, well, putting AI in our, well, devices and make our lives completely different from what it was before.
I really like that you've referenced Apple there. ultimately because the market capitalizations are vying with each other. But in our Tech News Daily, there's a great thought leadership piece there, ultimately, that Apple did this previously. It won out by having a sort of closed wall ecosystem, whereas Google went to say, hey, everyone can play in our garden. Whereas we're seeing that sort of playing out with Nvidia versus the likes of, well, of course, the other competitors that we've heard for, whether it be Intel working with all the other particular players out there, EPEC. I'm interested in not just the analogy between Apple, what's happening in China. I know you've had some thought leadership there from your own on whether we should, or if you can, invest in Chinese AI. They might win out too.
Well, actually, we think that Chinese technology and AI-related companies are intriguing because we know that in this context of technology war, Chinese government is putting a lot of weight behind its technology and AI companies. And China does have this pool of very big technology companies that have been once very popular, that still is in China, and that have a proven track record, and that are right now trading at extremely low valuations compared to the US peers. I mean, we are talking about a P/E ratio of around 10 to 20 for the big Chinese technology stocks compared to 66 for Nvidia and hundreds for AMD, for example. So in this context, they're cheap and interesting. Now, one risk is the geopolitical and political risk. I'm going to put that aside. But one other risk right now is the fact that these technology companies in China are in a fierce competition against each other. And they are mostly focus on expanding their market share rather than maximizing their profits. This is something that keeps investors a little bit reluctant regarding the Chinese technology stocks. But this is temporary because ultimately one or a few of these technology stocks are going to be the winners of this AI revolution in China. And that day, as an investor, well, you want to be in that elevator.
We started this program with Pat Gelsinger's belief that Moore's law is intact, that they will regain a foothold in the market. Is the addressable market big enough to have AMD, Intel, and Nvidia all offering into the same thing?
Well, I think the market is huge. The opportunities are huge. But what's going to matter is not only how fast and how efficient the chips are, but it's also how well the service and the ecosystem and the environment that these companies are going to offer. And it looks like Nvidia has a very good understanding of this 360-degree offering. So it's not going to be about chips only, but it's going to be about who is going to offer the best service to like the most of the companies on the face of this earth, not only to big technology companies, but to companies across most sectors. So I think that in this sense, yes, there is demand for a lot of chips because the AI revolution is happening and we are all concerned with it. But the real winners are, I think, going to be not the best ones in terms of their products, but also the ones that are going to be offering all the environment and the universe with it.
Ipek Oskar-Deshkaya, Senior Market Analyst over at Swissquote. Thank you very much. Now, coming up on the program, Paramount's annual meeting is underway. We're going to bring you those details next. Carrie, what are you looking at?
Just go back to chips for a moment, because we've had on the show before, Ed, CoreWeave's CEO. Look, it's a private company, cloud computing provider, ultimately trying to win out and offering data center capacity for AI. They're making a deal. They're going to spend about $1 billion to acquire a Bitcoin miner, Core Scientific, for $5.75 per share. As you can see, we go higher on Core Scientific today, up 34%. From New York and San Francisco, this is Bloomberg Technology. Paramount having its annual general meeting today. That's after the reporting that keeps coming from Skydance Media's plan, we understand, to offer $23 a share to investors. For the latest, we're bringing Geetha Raghunathan, of course, of Bloomberg Intelligence. And Geetha, we think about the promises made from these new leaders, 3 co-CEOs, interim CEOs, it feels, talking about streaming partnerships, cost-cutting. Any of that matter if there's potentially a deal on the table?
Not really, Caroline. And, you know, this has really been the story of Paramount for so many months now, because the fundamentals are pretty weak. Those have been completely overshadowed by these ongoing M&A talks. I mean, Skydance has now been in this M&A mix for many, many months. I would say almost 8-9 months. They had almost a 30-day exclusive negotiating period which expired in early May. There was another offer from Sony, which was on the table. I think that the speculation that Sony is still interested, that's obviously dying. And we still kind of have the upgraded Skydance offer for Paramount, but we do require that final sign-off from the controlling shareholder, Sherry Redstone. Yes, they did have the annual shareholder meeting, as you just pointed out, and obviously they outlined a lot of strategic initiatives. Again, as you said, I don't think any of it matters right now because you still have the potential of this huge deal kind of coming through.
So, Geetha, in your own research, you published this morning saying, final act in Paramount M&A saga as Skydance poised for takeover, dramatic television movie voice. Are you sure it's the final act?
I'm not, and that's why I said it's not over until it's actually over, because we've seen this movie now so many times, Ed, with Paramount, right? Skydance has been in, they've been out, they were prepared to walk away from the whole thing, and then, of course, you had Sony. And then you have some additional wrinkles now because we have, Hollywood financier Stephen Paul, who is rumored to be offering a $3 billion stake for, the National Amusements, so Sherry Redstone's controlling stake in Paramount. So who knows? It's just been a whole roller coaster with Paramount for the past so many months now. So again, very hard to say. Too many twists and turns in this drama.
And with some key players. And ultimately, it comes down to Sherry Redstone and whether she prioritizes herself or in any way some of the non-voting shareholders here, many of them being value investors rather than growth investors. I think of John Rogers from Aaron Investors, who's joined the show before, to talk about his frustration that the premium goes to the voting holder rather than himself, well, rather than long-term investors in the non-voting shares. What do you think needs to be articulated for the future of this business? Is there a future of streaming for Paramount more broadly?
I mean, that is a great question, Caroline. And I think that is the question that, that's the burning question right now. I mean, yes, with the merger with Skydance, Paramount will still very much remain a public company. It's not like the Sony deal where the company would just kind of disappear. But the question is, do mergers really do anything? Do they mean anything? I mean, we've seen this over and over again. Even with Viacom, the Viacom-CBS combination, which resulted in Paramount, we've seen a destruction of something like about 60% valuation. It was over 30 billion market cap when they kind of recombined in 2019. Today, it's close to 10 billion. So again, none of these mergers have really worked. You look at Warner Brothers Discovery, again, a fiasco there. You again look at Disney, Fox. All of these mergers have kind of really struggled. And so the question is, do mergers really solve the fundamental value? I mean, there is so much of pressure, secular pressure in the linear TV ecosystem. So again, that's a question that remains to be answered, and we'll have to see how that kind of plays out.
Geetha Ranganathan of Bloomberg Intelligence, really appreciate the analysis. Thank you. Now, coming up, Elon Musk's XAI or AI exaggeration. More of the company's chip procurement plans next. Carrie.
Meanwhile, let's just go over to Germany for a moment. Deutsche Telekom shares getting sold to the tune of 2.5 billion euros. Germany, the nation itself, is offloading some of its stake in this key telecom provider over in Germany. Basically, Germany as a country is trying to get some more money to hand, trying to invest in other areas, such as its rail services. This is Bloomberg Technology. Time now for Talking Tech. First up, Christie's hackers who stole client data have failed to upload any of that information to the dark web. Now, the hacking group known as Ransom Hub threatened for over a week to release the stolen files on Monday. But there are no signs that has occurred. The criminals said Christie's had ceased communications after they had attempted to reach a, quote, reasonable resolution. Sticking on cyber, a cyber attack on Change Healthcare is putting pressure on Washington. Congress and the Biden administration are stepping up efforts to better protect highly sensitive data from falling into the wrong hands. Up to a third of Americans are said to have had their private information exposed from the hack, and it's cost United Health up to $1.6 billion in profits this year. And meanwhile, major hospitals in London, they've been thrown into chaos. According to the BBC, a cyber attack on hospitals partnered with pathology services provider Synovis caused operations to be cancelled, patients to be diverted, and deliveries to be rerouted. According to the Health Service Journal, the system was victim to a ransomware attack. Ed.
Okay, let's get back to that other big story. Elon Musk, according to reports, ordering, and let's be honest, in Muskian style, may have exaggerated its procurements of AI chips for use at Tesla and X. More, Bloomberg's Craig Judell joins us, this time from Detroit, his spiritual home. Some breaking news. Musk has taken to X, you'll be surprised to hear, explaining that reports around him directing the shift of H100s that were destined from Tesla to X or XAI were for a very logical reason. Tesla had nowhere to put them. Craig.
Yeah, it maybe stands to some reason, Ed, because you reported just in the last few weeks that Tesla was running behind on building data centers. They're standing these up in Buffalo and in Austin, Texas, where they have their big factory. But this is a case still of an indication within Nvidia that they're sort of looking askance at some of the things that Musk has been saying about a really important aspect of Tesla's business. This is, after all, sort of where he's steering this company is to self-driving and AI, and really trying to play up that aspect of what Tesla is working on as the fundamental car business really is struggling for the company. So for him to have to address a report like this in the midst of a slowdown in EV demand and this big pivot that he's making toward AI and self-driving development, it's not particularly reassuring if you're a shareholder.
Particularly as we look towards June the 13th and that all-important shareholder vote where Elon Musk seems to be threatening that, look, if you're not going to give me my payday that you promised me several years ago, well, maybe there's more interesting things to be done with AI at different companies than Tesla.
Yeah, this reinforces that ultimatum that he gave back in January, that he wanted to essentially take his AI and robotics work elsewhere. And we've already seen indications that he's sort of willing to follow through on that threat that if I don't control something like 25% of Tesla, I want to work on this stuff at some of my other companies. And with any other CEO, that would maybe not necessarily be taken seriously. It would potentially be viewed as a veiled threat. But this is, after all, someone who runs 6 companies and has been standing up an AI company, an XAI, that is closely tied to X, formerly known as Twitter, and does have a significant amount of work that it's trying to do with large language models and essentially trying to build X up into a company that was worth the investment that he and some of his fellow stakeholders made in what was formerly Twitter.
About $44 billion, but a few years ago. Craig Judell, thank you so much. Breaking it down. Coming up, we'll dive deeper back into Nvidia and that global race for AI chips. That's next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. A very quick check-in on the markets. We got some economic data which has basically reinforced the idea that the Federal Reserve will have room to cut rates in the United States this year. And that's got a lot of people doing the math on their technology holdings and valuations. NASDAQ 100 tech-heavy index, a little bit softer. The SOX, or Philadelphia Semiconductor Index, is more markedly lower, down 1.2%. In fact, only 1 out of the 30 names is modestly in the green. And a big part of that story is kind of what's going on over in Taiwan at Computex. The main names that we're looking at throughout the show are Intel and Nvidia. Actually, Intel opened a little bit higher in the session. You can see it's now lower 0.4%. Nvidia softer by 0.5%. And things are heating up a little bit between those names. Listen to Pat Gelsinger speaking overnight.
We look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
Mr. Gelsinger calling out his industry friend and rival, Mr. Huang, at Computex. Mr. Huang, also the other keynote speaker. Take a quick look again at Apple. I put that in there because earlier in the show we talked about this idea that Nvidia, which is lower, and Apple a little bit modestly lower, is just a few percent away from overtaking Apple, 5% or so. And next week's a big week, right, Kara, because we have WWDC, where we think we're going to get the AI story finally from Apple and how it's going to work on my iPhone and iOS.
Goldman Sachs saying, look, reiterating that buy yesterday on the optimism around WWDC, but has been a real improvement in Apple's market capitalization of late. Let's just dig into it all with Bloomberg's Jess Menton, Bloomberg intelligence analyst Anurag Rana. And Jess, I want to go to you first in terms of the context here. Apple was having a pretty horrific 2024. Now it's broken back to basically flat on the year, and there seems to be this hope that it can get its AI narrative in gear.
That's right. So we just saw Apple on Monday actually close even for the year after it did hit an all-time high back in December. So it actually entered a correction, technically 10% off of that high back in March. But then coming into the second quarter, we have seen that stock recover pretty tremendously. If you look at its April 19th low, it's up about 18% in that span. And some of the conversations I was having with portfolio managers coming into the second quarter because of the big run we saw in Nvidia stock in the first quarter. And then when you pair that against Apple relative to the S&P 500, that was one of its worst quarters this century coming out of the dot-com bust. Whether or not there were going to be positions where people were kind of flipping some of the Mag 7 stocks there. So you're starting to see a little bit of that. But again, if you look at the top 6 stocks there, if you take out Tesla because of the volatility, you still see a record concentration there, about 30% in the S&P 500. But you are starting to see more optimism in Apple's stock recovering. And again, a lot of that has to do not just because we've talked a lot about that record buyback historic program that they had announced about a month ago, but then also some of the easing tensions that you would think some of the problems they would have had in China, Caroline.
Anurag, Apple ended last week with its third successive weekly gain. From the Bloomberg intelligence perspective on Apple, how much are we just treading water to WWDC, and how much are you hoping to learn?
Yeah, I think it is the change in sentiment on Apple because of all we have heard about different things. Mark has reported on what could happen on WWDC, especially a potential partnership with OpenAI and maybe even Google. So I think, it is a very important event for Apple, probably the most important WWDC in a long time, because it'll give us some direction in which way the phones can, grow either in the second half or next year. Because so far what we have seen, and again, sentiment aside, the numbers have not gone up. In the last 2 years or so. Numbers only been going downwards when it comes to Apple.
Jess, throughout the year, you've done some fantastic charting of Apple, charticles, chart-focused work. And we always used to refer to Apple as kind of the most important weighting name on the S&P 500. Now Nvidia is kind of like, oh, this is a macro-level event. Everyone, quick, pay attention to Nvidia. How has your day-to-day changed in relation to how you cover those two names?
Well, I still feel, especially when I'm speaking with my sources, that they do care about Apple because it's one of those names, even though we saw it struggle at the start of the year, because, again, with its buyback programs and the fundamentals, and then, of course, its cash flow behind the company for longer-term portfolio managers, that obviously is still going to be a key holding in there. So it's more of the shorter-term expectations there. But if you look from a hedge fund perspective, Goldman Sachs prime brokerage data, where they analyze data from hedge funds, they actually, coming into the second quarter, they started trimming their exposure to some of these big technology stocks, but they were actually looking at more different types of AI plays like utilities. So we've seen that particular group, especially since mid-April, really take off. And some of that, a lot of times people think of it as low volatility, dividend type paying stocks, and more of kind of maybe a safe haven. But this seems to be more of a play of a peak in rates, but then also a little bit of that AI play there. But again, if you're looking at Nvidia, coming into today, it was only about 5% away from trying to catch up to Apple's market cap there. But then also Apple not too far away from $3 trillion again. So if it does cross, that'll be the first time since January since it's done so, Ed.
And just sticking on the Apple theme, and there was some reporting from other outlets such as The Information talking about how maybe we could have seen a deal for offering Apple TV Plus to China, of all places. And Jess just mentioned this, the perhaps easing of tensions or people trying to understand how the China-US relationship impacts Apple. What are you expected to hear on that in the future, Anurag?
Yeah, so from China is concerned, I think more than these, the TV and the other things, I think the rebound in iPhones, what we heard in the last couple of weeks, is far more promising and encouraging, because there has been a big debate whether China is a structural problem for Apple or it's a cyclical problem. And the latest data, indicates, at least for now, that Apple's seeing a bounce back and people going back and buying the iPhone instead of, this particular argument that people don't want to buy Apple products right now. So that's, I think, a bigger driver for the change in sentiment when it comes to China.
Bloomberg's Jess Menton and Bloomberg Intelligence analyst Anurag Rana. Terrific to catch up with you both. Thank you very much. Now, coming up, we're going to be joined by Arun Matthew, partner at Excel, for his outlook on cybersecurity investing. That's coming up next. This is Bloomberg Technology. It's time for Talking Tech. And first up, Cisco plans to invest $1 billion in startups that are working on what it calls, quote, secure and reliable AI services as part of a push to be a bigger player in AI. The company says it's already committed about $200 million of the money and is making investments in the likes of Mistral AI and Scale AI. Plus, the Washington-based lobbying group J.A. Green, known for its tech-heavy client roster, including Palantir and SpaceX, is raising $100 million for a new VC fund alongside investment firm Anzu Partners, which will aim to back tech startups that support national security. And Hackloot, the London-based firm that's provided advice to companies and buyout firms for nearly 30 years, is now building a presence in Silicon Valley as a startup investor. The investment arm of the firm has raised its first VC fund, surpassing a target of $50 million. Caroline.
Nice VC roundup there. Let's stick with venture capital. Time for VC Spotlight. Arun Matthew is with us. And he's a partner at Excel, of course. He's usually based in SF. He's jetted over here to New York. Tech Week is upon us. But you're the focus of cybersecurity investments. You've got a lot of early money, early checks into some of the key companies we think of when we associate with Excel. 1Password, Better Cloud, Corelight. Look, we've just had a whole swathe of news of cyber issues today, whether it be Christie's, whether it be hospitals in London being affected. Are companies getting that they need to invest in their cyber right now?
I think they are, but it's a hard problem. We've been investing in cyber for almost 30 of the 40 years that Excel has been around. We've invested in 75 companies, over $2 billion across those 75 companies, 40 active investments across every major category of cyber. So we have a pretty good view of what's happening in the cyber landscape, but the threats are getting more and more extreme and more severe. And so it's a bit of a cat and mouse game. Yeah. You level up, you try to defend yourself, hackers level up as well. And so there's this dynamic between hackers and defending against it that's just really difficult.
Artificial intelligence making everyone level up?
It is, and it's being used on both sides of the game, on both the hacker side and on the defense side. But I do think that we are in a promising early stages of AI and the application of AI across a number of dimensions, particularly in cyber. And so we're really excited about what AI can do on the defense side in particular.
Arun, we've talked a lot about the idea that the generative AI tools available to play defense are equally as available to the threat actors, right? Those that are posing a threat from a cybersecurity perspective. With that in mind, what's the strategy, seed through to growth stage in where you guys deploy capital?
Well, for a lot of our companies, they serve companies of all types. Enterprises in particular have gotten the message that cyber is extremely important for them, and they're investing heavily. We're also investing behind companies that are attacking or that are in the mid-market and the longer tail of SMBs. A lot of cyber companies address these companies through what's called the MSP channel, the managed service provider channel. And so we're investors in a company called Blackpoint Cyber that addresses these companies that are sort of underserved. And so whether you're a growth company or you're an early stage startup, cyber is critical. Many of these companies are hiring security talent and CISOs at the very inception of their journeys. And it's a problem that's being felt across the industry.
A lot of what I hear from founders, CEOs, could be a company or startup of any size, is that they probably didn't think as much about their software and hardware infrastructure as they should have done because of the pandemic, right? They had a flexible working policy. They had to change sometimes to being fully remote. And that, in some cases, can make them vulnerable. Is there an opportunity for you guys in that?
Absolutely. The concept of where you sit. You used to, 20 years ago, you used to go into an office, use a company-issued machine, a company-issued device.
Still do every day, Arun. Every day, 5 days a week, most days of the year. Keep going.
A large percentage of knowledge workers today are working from home. And they're never going back into the office. And so how do you protect across their personal devices and their enterprise, their laptop issued through work? And so we're seeing a number of solutions, such as 1Password, that are being deployed across every device, across every login, across every application to ensure full coverage. And I think that's where the world is moving, that security has to protect you in your personal and your professional life, not just one phase or dimension of it.
I asked you at the start whether companies are getting with the program, but ultimately this is about me, you, the consumer, our kids eventually realizing that to have two-factor authentication, if not better, is the consumer getting with the program?
I think they're getting there, but I think they're getting there a little slower. There's always a little bit of a delay in terms of the consumer understanding it, but these hacks are getting, as you said at the beginning, more and more severe. They're getting more and more public. And so whether it's Ticketmaster or a number of consumer applications, I think people are starting to get the message.
Arun, where is the innovation in cybersecurity technology happening?
I see it happening across a number of dimensions. The zeitgeist, tech media, VCs, we're all talking about AI. But AI is only applicable if you have good data. And so we're seeing a number of opportunities in data security in particular, understanding the provenance of the data, the quality of the data, where that data goes. Understanding that is really critical to having a robust security strategy. So we're investing pretty heavily there. If you look at a lot of these hacks, identity is the core of identity-based vulnerabilities are the core of why these hacks are happening for the vast majority of these cyber attacks. And so we're investing pretty heavily in identity. The MSP channel, as I mentioned earlier, is a big opportunity to make sure that security is democratized for everyone. And I think the last one, we invested in CrowdStrike in 2013. It was an early investment for us. Endpoint was in its nascency then, but it's really exploded. A lot of the themes that we just talked about of having devices, mobile phones, laptops at home and at work are really important, and CrowdStrike protects those things. And so the endpoint in particular and extending into a number of other categories is where we're seeing an opportunity as well.
Excel partner, Arun Mathew, terrific to have you on the program. Thank you very much.
Thanks for having me.
Coming up on the show, we're actually going to talk about New York Tech Week with Ben Lehrer, managing partner at Lehrer Hippo. That's coming up next. This is Bloomberg Technology. Going viral and trending across social media and search, India's national elections. Voting chain coverage sits high up on Google real-time and daily search trends globally as tallies signal that Prime Minister Narendra Modi's ruling party was struggling to win a majority of seats. The race was also being discussed on X and LinkedIn as Modi vowed to carry on as Prime Minister, but he and his ruling party will likely be forced to rely on allies and other parties to form a government. In markets, India's stock market plummeted, erasing $386 billion in market value. Modi had appealed to India's 1.4 billion people with a package of business-friendly policies. His BJP party was leading in 240 seats, short of the 272 needed to form a government and well behind the 303 it won in the 2019 election. Karen.
Big market impact. Meanwhile, let's turn our attention back to New York Tech Week. It's officially kicked off right here in the Big Apple, Ed. And look, industry titans are here, startups gathering throughout the week for events, for panels, for conversations, for the odd party. Now, all week long on Bloomberg Technology, we're going to be speaking with those founders, with those investors and executives to talk about the ecosystem here in New York City and look, why they choose to make it home. I'm pleased to now say we've got Ben Lehrer, as managing partner at Lehrer Hippo, of course, long-time focus of VC, of media, of digital built here in New York. But you've been writing some checks, and not all of the companies are New York City-based. What is your view on allocating capital here, Ben?
Yeah, well, thanks for having me. We are longtime New York believers. I grew up in New York. We started the fund in New York. Everyone employed by the fund is here, and we've been investing in this ecosystem for a long time, far before it was cool. More than half the checks we write are to New York founders, but in many ways, the world has gotten smaller, and obviously with COVID and sort of the move to everyone getting comfortable Zooming for 3/4 of their life, we find ourselves investing in people all over the place, but we really do. We think we have our sort of strongest competitive advantage investing here in New York, and our community is centered here.
Ben, one might always say, well, I can see media being here, fintech being here, but you've been allocating money to Caldem Biotech, which is I think, Brooklyn-based company. You're doing Footprint, which is all about, the onboarding of people and knowing KYC. What is working here from an industry vertical perspective?
Yeah, so, when we started investing in New York 15 years ago, it really was a consumer market. And so a ton happening in media, a lot happening in commerce and sort of commerce adjacent markets. That has changed. And so I think it really started with Google and Facebook and sort of big tech building large offices here back in 2013, 2014, that you saw the market start to shift and you saw sort of real eng talent come into the New York ecosystem. That has only continued. And so I really believe today you can build any kind of company in New York. There is all different sorts of talent here. I think anything that New York sort of decides it wants to be great at, it ultimately finds a way to be great at. And so there's pockets of value all over the place. And, I will always think, or at least so far in my career, I have always thought that New York is the perfect place to build a company.
Ben, how strong and how important are the base of academic institutions out on the East Coast for you?
Well, I think that the Ivies and sort of like the large, there's a bunch of undergraduate institutions and graduate schools sort of throughout the Northeast that send a ton of students to New York. And so I think that those are incredibly important. Interestingly now, I think last year, more Stanford Business School students came to New York than to San Francisco for the first time ever. And so it's not just the New York schools that matriculate here, but that's really important. Obviously, you have Columbia and NYU and Cornell's Tech School and lots of sort of schools within the city, which is great, but New York is a feeder for all different kinds of institutions throughout the country at this point.
If there are three main advantages or three biggest draws for New York City, what are they, Ben?
Well, I think it's in many ways, New York is the center of the sort of economic world. I mean, this is the number one place that business is done globally, and certainly in the United States. So that's one. Two, New York is a really diverse and interesting place with it's a fascinating place to live. And so lots of interesting, fascinating, smart people want to be here, which is really appealing. And three, Lyra Hippo is here. So come on. What can I say?
I like that last one, Ben. Got to shout out the food, many other things that are here. Right. But aside from that, look, we can put all rainbows and butterflies around New York, but not all of it has upside. It's expensive to live. It's sometimes, we get a bit hard around the edges when we live here, Ben. But what, from your perspective, are you starting to see in terms of the ferocity of competition to allocate money here? Is it hard to allocate checks right now? Are you getting beaten out of them?
Yeah, so this is a different market than it was when we started investing. There was a handful of sort of institutional firms that were deploying into early stage venture when we got started. Today, you have a ton of emerging managers. You have a handful of funds that look like us that are really sort of true New York committed long-term institutions. And you now have a bunch of large multi-stage firms, many of which are sort of West Coast based, that have built satellite offices here. And so there's many more options in terms of where founders can go to raise money. I still think that there are not a ton of really high quality, truly New York focused funds that sort of have their best talent here and have the kind of vibrant communities that we do and some peers do. But there's way more talent these days. There's just more talented folks who are starting businesses and growing businesses.
Ben,
and so,
got to wrap it up there, I'm afraid, Brendan.
I'm sorry.
We thank you so much, Blair Hippo. This is Bloomberg Technology.